I don't see any particular reasons that we couldn't be at the bottom. And I'm not trying to say that we definitely are at the bottom, but like, I think the unwinding that had to happen has happened. This hasn't been just a crypto phenomenon. Like, when you look at what's happening in markets, right, you see similar things happening in tech. You see similar things to some extent happening, all over the ecosystem where basically you just have a really large, retrenchment of all of the gains that, have happened over the last, year plus in markets. And, it was sort of triggered by the Fed initially by, the expectation that rates were going to finally really start rising and rising more than people thought. But at this point, I mean, the carnage we've seen in markets, I think, is out of line with what 3% interest rates would normally represent.
Yeah, I mean, I looked at this, and actually I use, monetary tightening as in the rate of change of monetary tightening, plus commodity prices, plus inflation, all of this stuff, and the dollar. I think it's the largest tightening of monetary conditions in all economic history as far as I can find. And it just happened really fast. So, yeah, as you said, this is not a crypto event. This is just a liquidity event, and it's happening. I mean, look at the oil market today. Everyone's super bull on oil. Last thing I heard, somebody had a $350 price target. It's down 10% today alone.
Yeah.
But what's interesting to me is I think we're just shifting between what was inflation fears to now is what is a growth collapse. And for me, that's actually pretty bullish to the longer duration assets like tech that got smashed and crypto that got smashed.
Look, everything applies to everything to some extent. But as long as the big fear was really on like inflation and liquidity, that specifically is going to hurt things that had huge capital inflows more than anything else. And it's going to hurt, as you said, longer duration plays relative to like oil and bread. But if it really is just an overall economic event, that will still hurt everything. But the spread is going to change there. And I also think, for what it's worth, that people often get a little bit interestingly sort of like sidetracked when thinking about inflation, where, it's easy to see, the dollar, inflation in the dollar, and then you see all these graphs go up and you're like, holy shit, that's like an enormous economic change. And then all of a sudden the Fed starts tightening policy and all the numbers go back down and you're like, holy shit, but to some extent it's just a stock split in the US dollar, right? Like that's like one way to think about this. And if that's how you think about it, the whole thing's kind of like a little bit of a sideshow. I don't want to like over, sort of like state that point, but then when you start talking about the actual economy, about like, are we producing less shit now? Like that's real bad. And I think that is also a lot less of like something that hits the financial and financialized sectors and more of like a, there's just less stuff now.
Right. This is what we saw in crypto, was that writ large. It was so similar, where there was one or two players who had more leverage than expected amongst a number of counterparties. They all had one big client. That client blows up because of liquidity issues, and it takes everybody down. We've seen this rule book. We've seen this play out before, right? Yeah, there was an old client of mine gave me an expression that stuck in my mind all the way through my career, which was, he who has cash in a recession is king. And it's like, I can see that you're in the advantageous situation of having cash in a recession, and there's opportunity everywhere because the space is not, the dynamics of the space haven't changed in the long run. It's a short-term phenomena that leads to opportunity, I guess.
Oh, certainly. There is a lot of dislocation, and there are a lot of, potentially really good, plays that one could make here if you had infinite capital backing up, that. And of course, no one has infinite capital backing up anything. But there are still good plays if you have like significant but finite amounts of capital. And so I think that, one of the things we've been thinking about the most here is just like, given everything that's going on, like, what should we be doing? Like, where is it most important that we're deploying our capital right now?
What's your answer to that?
Like the sort of classic place that you want to look at is something that like would be totally fine, except for a really nasty short-term liquidity crunch, right? The closer you are to that sort of like ideal, the closer you are to a place where, from every perspective, that's where cash should be deployed, right? Both from the perspective of like, is there a good investment opportunity there? Probably, but more importantly, from the perspective of like, can you bail out some customers, bail out a company and stop contagion from spreading in a way which is basically permanent, right? Because it's not like a business that had to go under. Like this is just like, there was going to be effectively an economically inefficient crunch in a business because of short-term conditions. So that sort of is a Platonic ideal that we're looking for above everything else. And of course, nothing is a Platonic ideal, right? Like everything is actually nuanced, and everything at the end of the day, it's all shades of gray, and we understand that, and we're not sort of like looking only at perfect systems. We don't just want to be throwing good money after bad, on some of these things. But if there are cases where we can, actually really, either sort of, save a really good business, and or where there's sort of like serious customer protection issues that we can help backstop. And then probably the biggest thing is like contagion that we can actually stop from spreading, right? Not just like bailing out contagion dollar by dollar, right? But like stopping a bunch of contagion with a smaller capital outlay, because it stops like the whole process from having to unwind. Those, I think, are the places that like we are most looking.
Yeah, and distressed investing itself is a very interesting opportunity in itself, and then being able to accelerate your roadmap by doing it is the double whammy, right? It's a perfect state where you can stop contagion spreading because you're the distressed investor, or there's a whole bunch of people who are, and then you get to accelerate the roadmap. Okay, that's a great opportunity.